Ladies and gentlemen, welcome to the Value Investor by Tipranks. My name is Tom Nash, a former senior financial analyst, currently on YouTube, giving you financial education and financial information for normal people in a normal language. Now, the question I've been asked at least 50 times over the past 2 days, is this stock market real or is it fake? People want to know. I'm going to preface this by saying I don't know, and neither does anybody who's on mainstream media talking about it. They don't want you to know this fact because they're trying to seem smart, but nobody really knows. We can only estimate, guesstimate. None of this actually matters because none of us knows except maybe God at this point. The reason is because if you really think about it, as investors, imagine a football pitch. And we're little ants on this football pitch. And each piece of grass seems like a building to us. And we're seeing each piece of grass as a building. However, if I'm sitting at the top of the bleachers, each piece of grass seems like this little tiny dot. And I can see the entire field. So as investors, we never get that view. Only 10 years later. In real time, we can't see the field. We can only see this grass that's in the size of the building. And we don't know where we are in the field. How relative. But let's say we're this little ant and we want to get off the pitch, get off the field. We don't want to get trampled by some football players, right? So let's say that we just head straight all the way. We don't know where the exit is. We'll just go straight. At some point, we're going to run out of pitch as long as we keep going straight. Now, it would be easier if we knew where the entrance is, if we had the top view, but we don't. However, let's say that another ant decides to guess where the entrance is, and it keeps turning right and left, trying to figure out where is it. And essentially, what happens is this little ant goes in circles, stays on the pitch, while if we go straight all the way, we're going to get off the pitch. So I know it's a little bit of a convoluted example, but it's exactly what I want to talk about. Right now, we're at max fear. So this is the fear and greed index that you're looking on the screen right now. We're at max fear. And I want to remind you that Warren Buffett said, very famous saying, when everybody's fearful, I'm greedy. And there's an opposite to this. When everybody's greedy, I'm fearful. And he proved this. He didn't buy anything through the pandemic. He sat on record-breaking cash. And now he's on a shopping spree. Now, I'm not saying that this indicates that we're out of the woods or the rally's coming or the rally's sustainable. I don't know. There might be much more pain coming. But here's the thing. When fear gets maxed out, smart money starts to look at growth and tech to potentially try to get it cheap before everybody else. Now, they have the patience to do it because they have the strategic mindset of buying now and waiting until the pain ends in a year, 2, 3, 4, whatever. As retail investors, we don't always have that patience. And it's a shame because here's the kind of undisputable fact. If you stay in the S&P 500, long term, there's no way you can lose money. Long term, I'm talking 5, 10, 15 years. Because the S&P 500 is like Steph Curry, the three-point shooter from the NBA. And these are the stats of Steph Curry, just so we can see what I'm talking about here. So Steph Curry has about 42, 43% per season for three-pointers. You can see these stats right here. Meaning he's shooting and scoring on 43, 44% of his attempts from 3 points. Now, you can see right here, for example, he had a bad season, 24%, half of the usual. But if I show you here, it's only because he played 5 games. So as long as he plays the entire season, Steph Curry is going to have about 40%, 42%, 43% in three-pointers. Now, he can have a bad game, a bad month, even a bad 2 months. But through the entirety of the season, Steph Curry always finishes about 40% 3 points, which means he's scoring 4 out of 10 3-pointers, which is very high, by the way. He's the best. The same thing with the S&P 500. The S&P 500, long term, is always Steph Curry. You can have a bad year, a bad 2 years, a bad 3 years, even a bad 4-year period. But long term, if you double down in the S&P 500, long term, 5, 10, 15 years, the S&P 500 always goes up. It's the US economy. It's the craziest cheat code in the game. So I think the question here, and that's what I was leading to, should not be whether the stock market is going up or down, whether this rally is real or not. It's not trying to time this rally or that cat bounce. The question should be, do you understand that doubling down into the S&P 500, even in times of crisis, especially in times of crisis, long term over 5, 10, 15 years has been proven to be as absolutely the best strategy going forward. Because if you understand that, you should not be asking whether this rally is real or not. You should be buying the S&P 500 and doubling down, DCAing to it as much as you can for your future and not touching it for 10, 15 years. Now, of course, this is not financial advice. This is just my own personal opinion, which might be inaccurate, might be wrong, might be the ramblings of a madman. You have to do your own research. You have to talk to a professional. Don't make any investment decisions based on these videos. This is just YouTube, just for reference. But I just wanted to highlight this using some three-pointer stats from Steph Curry, that the market tends to be very, very efficient long term. And timing the market is never as good as time in the market. Remember that. See you in the next video. And don't forget to check out the new feature from Tipranks. It's called Smart Portfolio 2.0. There's this incredible webinar tomorrow by our co-founder Gilad. He's going to be there at 2 p.m. Eastern, 11 a.m. Pacific time, talking about it, showcasing. It's absolutely free. I think the feature is revolutionary. Go check it out, and I'll see you there. I'm going to be on the webinar as well. I'll see you tomorrow at 2 p.m.